So, can everybody see my screen? Are we good? Let's make sure. Everyone, we good, we good, we good. Okay. This also will be open question and open answered. So, I want to make it really, really, really clear. If you have any questions and you are frustrated and you don't know what to do, then by all means, please ask and I will answer and we will try and go over things as extensively as I can. What I look for, why I discuss things, why I'm looking for things, blah, blah, blah. There are certain techniques in trading that I use in comparison to other intraday traders, which other people have taught me that I'm super grateful for. We discuss things like swaps, momentum, IV, continuation, candle openings, candle closes, and I focus on all those, and it provides me a very in-depth accuracy. For the most part, we usually get the ranges pretty well. Um, so before I even continue, and I want chat to do this just so we can do this all live together. Everyone can do this so you understand the system, what you're looking for, what's going on. Pick a ticker. So what I mean is pick a ticker that has any large liquidity, something Apple, AMD, Google, Amazon, Nasdaq, SPY, anything. Just throw a list out. Anyone can give me answers, and I'm hoping you guys give me some good ones. So just pick a ticker off rip, whatever you want to see partially charted. Meta? Okay, we'll do Meta. Meta and Netflix are really, really good examples, so I probably will show Netflix um, later on in this, but Meta is a really, really, really good one short term, right? So the thing that you can identify already that I want to show you with technical analysis short term before I do any fibbing, before I do anything complicated, anything like that, is one, whenever you have an ER, right, like an earnings report, you will automatically have liquidity show up afterwards. This is very obvious, right? So what I want you to do is whenever you have a major earnings report gap up like this, you go to what we talk about every morning at 8 a.m. and you do three things. You're going to mark the bottom of that, you're going to mark the top of that, and what you're going to do is you're also going to mark the bottom of this continuation. What is this you basically or what is this saying when you're doing this? You're basically saying that meta from now on going into this quarter into the next, unless you're looking for a character change, is along above 227. And from there, we're going to look for these supports to continue coming into the market short term. So in this example, meta you can see very clearly surges through it, da 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 da. You see very clearly how it back to short term, blah 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 blah. And then on top of that, look where it's being accumulated and look where it's being day traded. So even without us editing the chart, you saw us do it live. This is a perfect price channel. So you can very easily identify zones of support and resistance and so on and so forth. Now, the major question is, right, how would you know where price is going to change short term, right? Because everyone always doesn't understand that. Well, again, let's just go back to that prior earnings spot that we discussed, and we're going to do a small little rectangle right here. We're basically going to take this and we're going to take this. This is the character change from Meta from that pre-market consolidation moving forward, right? So when we look at it over here, I just want you to, again, observe. See how it sucked through these pockets for days, but it squeezed at the bottom of them every single time? This is to show you that that's where that dark blueprint accumulation and reversals are happening. This is how algorithms react short term. It's how you get that expansion, so on and so forth. And then if you want to go into an even more in-depth perspective, all you need to do is just slightly zoom in and go, okay, well, where did it dump recently to get into this range, right? We're going to take this local top. So what has happened from Meta ever since it got up here? It's been in a downtrend, right? It hasn't really gone out. So we're going to quickly move on over to the zone, and you can notice when I zoom in very clearly, you can see again our ADM system smacked this thing and it has been able to get out. So we're going to take a small little fib tool and we're going to take that range, or we're going to take the ADM low, we're going to take the top of that impulse. And I just want to quickly show you when I move over to these, the levels and how it behaves, right? You can very clearly see structure changes without even editing this chart. Even when news comes in on Meta, you can see how it plays that reversal and how they price in these things and how things continue to dump and how things continue to expand. So this is a very, very, very clear example of the system, how it ran afterwards, how it back tested, formed a channel, and to get to these pivots, all we're going to do is just do that slow remeasure, because right, you can notice price does something like this, right? So we just take this low, we're going to take that high, and we're going to do something like this. So my problem with Meta short term is it needed to put in higher lows, which it has, right? This bounce isn't the best. This bounce is healthier, accumulated, and a reverse stronger. But because this bounce was weaker, this spot got rejected and it failed to put in a higher low and to close. So basically what we're trying to say is if you're watching Meta, the new spot is if it's going to surge, isn't just at the bottom of this anymore because we've already done that, right? It's trying to raise that continuation support up above 234s and 235s. So that's just a short-term way I would chart something at post ER, things like that. Now, the other question, how do I figure out a plan for the day? What can I do? How do I figure it out? Because every day is different, every day is hard, and that's why I asked for multiple examples because every single individual ticker will have individual behavior. So, for an example today, I told everybody to watch Airbnb, right? Airbnb has been an aggressive downtrend. So, what we can do with Airbnb is basically move on over, right? We see again our 8 a.m. candle show up on Airbnb. Now, this is a very interesting one, right? Because it's a prior downtrend, and you can see a dark pool print right here on the left, right? So we're going to mark that. So this is us basically saying the opposite of what we just discussed on Meta. This is us saying, hey, and we need to get above these two prices in order to have an IV reversal. Until then, it's a bearish swap, right? So when we're observing this short-term uptrend on Meta, or on Meta, sorry, on Airbnb, we're going to take a fib set, we're going to grab that low, and we're going to grab that high, right? So we can very, very, very easily see, moving on from Airbnb, how it failed to get above this golden area, and it or distributed, short term at least, at that dark pool print. So when I saw Airbnb today, I had one thesis in mind. This stock is just short. It needs to get out above 112 to be a long. If it doesn't, it's going to nosedive. And then you can very clearly see how it lost those lows. So I know a lot of you want to learn fib rules, and we will slightly cover that throughout all of this. It takes some time, so I will have to revisit the subject. But when you have a stock that you're measuring to the upside like this, even though it's in a bearish trend, you're very unlikely to break above a 2618. It's usually really hard. And if it does that full impulse, like let's say it just did this hypothetically, then in that same session, you can expect a dump. We've seen that a lot where something will run really hard and just get rid of all the losses. So in this reversal example, you see how it just goes parabolic to the downside under that low? Because that's that loss of that 8 a.m. low we were just originally measuring. And in order for us to find these targets, all we're going to do is take the same fib set and we're going to flip it. So instead of measuring it bottom up, we're going to do it like this. So that's us saying 110.40s is now the roof. It's starting an aggressive downtrend short term. And remember, if you discussed up here, or what we saw up here, that was that 2618, 272 rejection. Now, do you think it's possibly random that it bounced off a 272 into close? It's the same, and we did this live, right? Now, the other thing that I can even show you without even doing this fib set stuff is they show you when a stock is going to move if you have certain data plans. Note there is level 3 data that you can pay for if you're a market maker. Obviously, we're not. So you only have things like ARCA, NYSE, NASDAQ. But when we see dark pool prints coming into the session, all you need to do is measure those range of those prints. So for in this example, it's a $2.25 impulse. So we're going to say every impulse is going to be followed through by $2.25 or more. So $2.25 down. How do we confirm that first one? Well, we need about $1.15, give or take, right? So you see how it stalls right there? That's where that body opens, and then it slowly triggers that impulse down. And then again, it breaks through. $2.25 down. Again, it breaks through. $2.25 down. So you don't need to be guessing where you're going to be scaling. You need to have exact spots where it's going to flush and where it's going to run. And those price changes are real. Depending on where price is within the stock, it will have a different movement. So you need to be very, very attentive to whatever you're trading. If not, you get caught up in random impulses that hurt you as a trader. So this is an example with Airbnb, for example. Now, again, I just want to show you if I pull up this chart, and I'm going to remove everything because I don't want people really to get too complicated with what I'm doing right now. And I just want to show them what the character changes are like when you lose these prices without even doing any fibs or anything like that. So if I was just doing what Dog would do, but my own system, I'm just going to mark a box right about here. Whoops, that's the wrong spot. Mark a box right about here. What happened here? We flushed through supply. Okay, well, where's your former demand? Um, well, we rejected around this spot, so let's go to this day. I'm going to mark the bottom of here, right? Why? Because this is where we fought yesterday. So look where it changes, right? Or if I move over to the next session and I do something like this, well, we have positive character change over here. So when we're playing things to the downside, look what happens. And look where we closed, right? This is unedited. You guys all just saw me do this. The point is, these zones are like vacuums. It's just one big price movement. But us as traders and us as scalpers, we have developed a habit into playing short-term impulses and trying to get that tight bottom, tight stop, and get that huge flush when you shouldn't be looking for that. That's not proper. Your proper trading should be you capturing a full impulse and a proper impulse by observing these zones and observing this liquidity. And it's present on whatever chart you look at. And this is why I say so actively when you're doing certain price changes, you will have a certain effect. And so I'll pull up this example, right? And I'll remove these drawings and I'll put on a 15-minute. If we notice we had an aggressive downtrend to FOMC, let's all of a sudden do something like this. So we're going to take that same box. We're going to mark that core session for post FOMC. Then what we're going to do is also mark this area. What's this? It's that 41020 dark pool print that showed up. So if you remembered, I told people to do their homework for a reversal because you can figure out those zones of liquidity, right? And if you did your homework that day, this is when we called out that reversal. We looked for accumulation on Thursday, a run up, and then a consolidation, a pump, and we went long here that day. And we scaled in here into the end of the day. And it's not that it's priced in or random or not random. It's that these algorithms and this candle that is coming in every single day that we're observing is for them to stay as delta neutral as possible. So when that's happening, you have to pay attention to where your price is at. If it slips through certain zones, then it gets heavier. If it slips through certain or pops through certain areas, it gets quicker. So when today happened, then just a live example, I said watch 41090s and I said watch QQQ 32460s into the end of the day and we can get a character change. Now you can very clearly see if I just zoom out where they price this in, right? It's not hard. We're not really guessing. And on top of that, when we look at our prior liquid, right, when we zoom out, look where it pops in the same impulse we played today, right? And we catch ourselves getting concerned about certain things and certain price movements when we shouldn't be. We need to be expecting those. So, what I'm saying to you in the seminar is when you start charting over the weekend, instead of going, okay, price reacted here, price react, don't do that. It hurts your brain. That's too much noise. Each impulse is one gigantic move, even if it's laggy. So you have to figure that out. Now, every day obviously is going to be different. And so when you have these certain sessions, you can figure out certain things. So, like today, we said if it doesn't break this, it's just going to break down. And very clearly, we got that breakdown. And then we said continuation under this, continuation under that, and so on and so forth. Now, I will say there are minor, minuscule details that I think traders also miss. So, in this example, I'm going to show you Apple, where the market was positive post Wednesday and Apple made a new monthly high, and then all of a sudden rug pulled and flushed, right? What does that mean to you as a trader, right? How does that affect you? Well, obviously, if it shows a new monthly high and you're going into the weekend and it starts flushing from then on, you can perhaps build a thesis. So In this case, I wanted Qs to continue going lower and hit those targets. We hit that around here. And then you saw me adapt and discuss, you know, that 170, 120 spot, right? And I said it was priced in because we hadn't revisited this and 170, 170. And the reason why I was saying that is if I pulled up any chart right now and I look what happened on that Wednesday and I compare it to Apple, there was not a single stock in comparison to Apple that did not tap its core. And if you don't believe me, we can just look Google, tap core, Tesla, tap core, Nvidia, tap core, right? And we can keep doing this. And so my point with this is that when something isn't following the same behavior as the market, it can sometimes be a warning sign. And today I came into the session almost fully bearish. I was bullish for a moment at the open, we failed, and I was bearish all the way into low a day, and then I swapped sides. I tried playing some short-term scalps, and I shouldn't have done that. And that's me being reflective as a trader. Um, Now, another thing that this is going to be a wider topic change, but something that you can figure out in terms of sector rotation and figuring out what to do from ticker to ticker is one, just have your sectors at the top, right? See what's being rotated to and what's not. And then two, I want everybody to look for candle structure. So if I pulled up a weekly time frame, we can likely say XLE, for example, is barcoding and in a bearish trend, right? We can look at XLU and say it's pinned. XLP is trying to be rotated into. XLB is pulling back. XLI is pulling back. And so all you need to do sometimes as well in a simpler form of technical analysis, and this is what Dog and other traders like to do, but is just marking those weekly bodies. And that's it. And just seeing, all right, if you got above your weekly open, if not, then it's in a bearish trend. And so in this particular example, this is industrials, right? Look how industrials failed that prior weekly high. This is without even me fibbing. So that is something I also highly recommend you doing. Um, so again, I'm gonna ask here really quickly for individual tickers so I can see specific character changes in this next part of the seminar. So if you guys can, please give me some more tickers. It would just help out a lot. Um, so like AMD, anything like that. Mm. Here, I can do this. AMD would be nice to see. I got you, but I'm gonna do this one first because we talked about this. QQQ Weekly. Do you? I don't know what you mean by that. So another example I want to provide is Netflix, right? How did we know Netflix was along? What did it do? Why did it do? Right? Question. Sorry, I'll answer that in a second. Or talk about Netflix in a second. Can I formulate a SPY QQQ daily plan without looking past pre-market? Uh, yeah, kinda. Um, but I think pre-market is gives you the data you need for the day to begin with. Other people would say something completely different. Like people are like ES, shows you what's going to go on for the session, right? Which is true. Um, yes, you should be able to, but you need to understand that they're pricing in different cycles throughout different changes. And that's the hard part. That's what gets everybody confused. Is one day you'll have like an intraday measurement and then all of a sudden you'll reverse off something and you might not know where it is. And yeah, and that's the hard part. And I know that's hard. Um, so like if I was showing you Netflix, for example, right? If everyone remembers Netflix did this crazy V reversal, right? So all I'm gonna do is do a bearish retracement here on Netflix. Okay? So everybody sees that this number is a 2, right? So this is kind of a fib sequence part of the seminar. How do we figure out whether a stock is strong or weak? What's going to change that trend, right? That's going to be the impulses you bounce off. So in this example, we have a high volume node here on Netflix, 322s to 320, and then 315 to 312, right? So already we can identify that volume. So when we see this retracement, boom, we have a 2. So if you understand that, you understand a 2 isn't strong, but it's not weak either because it's above your golden areas. And if you're confused what a golden area is, it's a 3, 2, 6, 1, 8, 1, 2, 7, 1, 6, 1, 8. 272, 2618. So as long as you're above these structures, you have a healthier reversal. If not, it's either A, V reversals, or B, it's laggier and it stalls down here and then dumps again. So automatically you can check something off as 1, 2, 3, or 1, 2, 3, something like that. You have to understand that the impulses will be different depending on what they want to do with that stock. So in this example, right, and I'm going to put this exact fib on as well so everyone sees the difference. When you bounce off a 2, what do you think likely would hit? If it's 0, 1, 2, 3, 4, so on and so forth. So a 2 bounce has to reverse into a 1, and that 1 confirms a 0, right? As long as you're holding above it. Now, again, it's not strong, so see how the 0 comes back down to the 2, right? And then they make a lower high, and then it's accumulated again, and then the trend changed. So looking at this, you go, okay, so what happened? This stayed delta neutral the whole time. It didn't get actual breakout buyers until this pivot, right? Because it started putting in those equal weight higher lows. You can very clearly see when I'm looking at this, see how 127 started breaking out. Notice how 382 held, 382 held, 382 held, and then we surged. So playing that reversal, it's really, really easy again with the system. This is why I told you guys 2 months ago that Netflix was the perfect example to start learning on. And we should have all been prepared for this trade if you did the homework, right? So in this opposite end, when we're going to measure Netflix up, we're just going to do that same thing. And there's two ways we can do it, like I said. Either one, we're going to look for that flip of the reversal zone. So we're just going to take that same candle and we're going to flip it. So just take that low, take that high, right? So if you remember that base is a 2, right? This we bounced off a 2 over and over and over. Do we think it's sudden coincidence it topped at this 3, right? It's equal. Everything is equal. And you have to figure out those zones. Now, the thing about Netflix that's really beautiful in comparison to this chart is today could be a really bullish backtest provided it's still holding and it can continue a breakout. Now, there's also another way to do it, hypothetically, if you wanted to just flip it the opposite way. Now, the main reason why I charted it that way was because it's neutral, right? Remember, we discussed a 2 bounce isn't the healthiest, but it's not the worst, right? So if I flip this up and just go 1, 2, 3, because reminder, Netflix hadn't flushed really below this low the entire time, right? And remember, this is a 2. This is us basically saying this is a bullish reversal. So I'm taking a trend line and I'm trying to measure it up and see where it can break past this high, right? So understanding that this is again a 2 bounce, now we're measuring it in a bullish way. The way we were measuring it prior is still bullish, we're just flipping it. And if it's a 2 bounce, all we need to do is see it break or hold 2, which it did, and then it breaks out. Now, obviously, we don't get that to the cent target here, and that's because this is an extension. So this is an improper fib set because it's not a bullish reversal. But provided it's going to continue running, let's say it does, we can now do something like this on Netflix, where we adapt and go, okay, well, this is our new support. This is our local top. This is our equal weight low. Let's see if it can start a bullish trend. And so that's how you would do hypothetically one of those remeasurements. Um, Overall, I think there are many, 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 many ways to trade. The thing that I have been starting to notice more is traders need to start basing things on fact. Now, if you can't do that, then your system isn't true. Now, I don't want to say your methodology is wrong because it's not necessarily wrong. This is something that traders were taught for years, right? Like technical analysis, EMAs, SMAs, trend lines, indicators, whatever you're using. But if your indicator has no fact in the way that it's working, then there's problems. So in today's example, why we were so bearish, I can show you guys for fact where those areas were reversing, being supported, where they rejected, where they stalled, where that movement was different. And we don't ever have to assume that. We know that because that's where that price behavior change will come. And again, even if you're not doing the fib part, which I want to make it really, really clear, all you need to do is just identify these behavior change zones. And as long as you're above them, you're realistically fine. It's just choppy, obviously, because we're in a weird market condition right now. Um, but I want to make it very, very clear when I say this. You can do this on any individual ticker. You don't have to assume what is happening with your stock. And as long as you have that, you can figure that out. Now, and a blind example, and this is something that I can study with, right? And Great Blue, this is what I want to show you as an answer. I'm going to do something on, let's just do Tesla, right? So let's see if I can only do intras on Tesla. And how would I figure that out? Only intras, nothing more. You still pay attention to the other spots, but right? So Tesla on intraday had dark pool prints down. So automatically we see there is short-term pressure on Tesla. All we need to do is see that character change under yonder, right? And then three, how do I do the fib part? So in this example, you can see my chart's completely naked. There's nothing here. We're going to do the 8 a.m. candle, again, specifically only that candle, right? Take that fib retracement tool. We're going to measure it this way. Why? Because, again, notice how price did not lose that low at all. So it's equal weighted, right? So in this example, and so everyone can follow through, and this is me only doing an interest. So this would be if I was using my system, again, only on intraday, not hourly and not anything like that. And we see this 1414, right? Let's flip it down. So if I measure this down, right? Where's the 1414? Right here. So look how it perfectly flushed from 1 to 2 and never really stopped until it got to that first term golden area, right? And then you can see clearly, retest 8 a.m. low, 1, 2, 3, bam, hits your dark pool print. And then from there, it's just in a bearish trend, right? But again, this is unedited, right? You guys just saw me do this live. I hadn't looked at this chart all day long. The whole point is, again, it's not random price movements. You just have to figure out what they're doing. So in this example, if I'm doing AMD and we look at AMD and it goes, okay, well, dark pool print here, so they're roofing it. Dark pool print here, 8 a.m. low here. Instantly opens as a short. So I don't even have to fib this, but if I wanted to, opens at the 8 a.m. low, flip it, 2, right? So we're going to flip it down. 1, 2, 2, reverses, fails 8 a.m. low, dumps. Now, in this example, well, let me put that back. In this example, notice how it breaks to that full cycle area and it just continues to drill. This is exacerbated selling. So AMD was weaker on intras in comparison to other things today. So when we do this, all we're going to do is just take this bounce right here and we're going to delete this. We're going to go 1, 2, and that's it. That's it. And you could do this on any ticker, any day, at any time. And it's not that hard. So I'll move along. Let's do Amazon. Again, let me bring my levels back. Hold on. I deleted all my levels, please. Excuse me. Okay. So, again, let's do Amazon, right? So, boom, remove drawings. So, again, 8 a.m. candle, dark pool prints, pricing and supply. 8 a.m. candle opens with a sharp liquid reversal down. So we're going to do two things. One, in this case, I'm watching it with us looking back at the session. So obviously I can't see that reversal down, but we can see that in this specific example, Amazon does breach that low. So there is that short-term pressure at least. So let's see where it gets bounced off of. 1, 2. So again, in this example, it's a 2. Not the best, not the worst. What we're going to do, delete that, flip it up, 1618. Dark pool print sitting at the 2. So again, it's not getting above that golden area. So 2 bounce, 1618 rejection, right? Where would we think it goes? I'm going to say likely a minimum of 3618, but let's just see. And this is me not looking at this at all. I'm doing this for the first time and see exactly what I mean. Look, so 3618 hits, and then it tries a quote-unquote bullish trend. But again, notice how, remember, if we understand this bounce is a 2, it rejects this 3, and then it rejects this 327, so it just starts getting heavier, and then you see this full cycle break, and it gets forced selling. And if you practice this enough and what I'm doing, you don't have to guess. You can just know. And so in this example, we see it pumped here to a 1618 at the top. Remember, we measured that previously. And then we're going to just flip this down. So we're going to go like this. And let's see where it bounces. Let's just assume. Yeah, we can do that. Great Blue, I got you. So 1618. Remember, extreme selling. 1618 flushes through. 2618 flushes through. Equal weight low. So remember, why are we saying this is an equal weight? So everyone understands this. So I don't want anyone confused. Remember when we just originally measured this, this was a 3 to the downside. So look where it gets accumulated once it hits that next 3 spot. I'm not saying it's not going to dump anymore, but that's where it needs to continue defending. And so this example, you can see how it got pinned. And again, just so everyone sees, there's that 3 rejection right here. Now you said, can we do May 4th on QQQ? Yeah, we can. So moving on over yonder. All right. So boom. So May 4th. May the 4th be with you. Easy peasy lemon squeezy. What are we looking at? 8 a.m. low opening here. 8 a.m. body rejecting before market even opens. We also have dark bull prints to the upside. to the upside. So let's keep that in mind. So let's take this 8 a.m. low. We're going to go 1, and then we're going to go 2. Bueno, easy peasy, lemon squeezy, 2618 zone. That's a bullish reversal. That's good, right? So now what's the problem? Why does it not get out? Well, if anyone remembers, 2618 needs a continuation to a 786. Without even editing this as well, I can also see that's my 8 a.m. body swap. So if you're unfamiliar with the candles and how they work, what they mean, and because I know we're just doing the fib part, basically you have your 8 a.m. structure. So this is only the 8 a.m. candle I'm drawing right now. Whoops, I need to do that. So this is your 8 a.m. candle. So let's say it opens in this particular example. So there's your body, right? So if it's above the body, or yeah, above the body in that candle, that's a positive swap. If it's below the body, 1 minute, 1 minute, 1 minute. So 1 minute, 8 a.m. And because the other candles also have a meaning, and we'll go over those right now. So when we're fibbing it, we're only fibbing the 8 a.m. candle. We're not fibbing anything else, specifically 8 a.m. Eastern. So in this example, you can see swaps down under this body, and it rejects this body right here, right? So that 8 a.m. candle, we're basically observing it as, you know, again, this body, and then above it, positive, below it, negative, and then we use the low and the high for that confirmation, right? Now, what about the 801, 802 candles, those other random ones? What are we looking at? What is that meaning? Well, that's the same thing, just without fibs. So that is them saying the overnight market maker priced in supply here. And if you get above it, it's a lot more positive. It doesn't mean it gets above it that day. It doesn't even mean that dark bull print's going to hit that day. But it's saying when you get above it, there will be a trend change. And so in this example, look where they priced in supply. That's your overnight ES swap when the cash market opened, or not cash, when the pre-market session opened. So in that example, right? Look where it rejects. So body rejects, dark bull print pin reject. Now, if I look at SPY, we're going to also probably see something. So let's quickly move to May 4th. Let me get my original levels back. So let's just quickly move to SPY on May 4th just so we can have a respective answer from both sides. Well, perfect. This is easy. So SPY, what do we have? We have a dark pool print, massive, 41020. Told you guys about this earlier. 2, another dark pool print, pretty massive. 3, that price is in your reversal. So that's your ES pin going into the opening, right? Where does price swap under going into the opening? Where does price reject? The same time Q's rejected that body up here, SPY rejected the 8 a.m. low. So you can see how it's equal at the same time. It's not happening at random pivots. SPY's not, they're moving in equal bases. Um, and if I was to fib SPY, remember we said that was a 2618 bounce on NASDAQ. If I do it on SPY, not the best, but you see how NASDAQ bottomed at 1210, right? So let's quickly go back to that chart just to make sure we're looking at the same thing. And actually, let me get my levels back before I do that. Okay, so let's go back to that same spot and look at 1210, right? And again, we're doing this all live. So 1210, what happens here on Qs? Well, this is the pre-market low on Qs. Look what happens, right? So these prices are behaving with each other at certain times of the day, and you just have to figure out which one's where and why. And today, for example, Apple was the reversal off 171s. Now, he said to do May 5th, so I gladly will do May 5th. How do we know price is going to keep pumping here? That's a great question, Great Blue. So, obviously, what we're going to do, we have lower dark pool prints this time, and price holds it. So what's that telling you already? That they don't want to lose core. They don't want to lose that core session right now. They're trying to pump it. So we look at this. We're going to take that candle, and all I'm going to do is I'm just going to measure it like this. Nothing else. Now, does this look like it's rigged to you? Now, I'm not saying, it is. I'm just saying that there's algorithms. And if you're wondering how did I get that little overshoot up here, right? We're just going to take that low. We're going to go 1, 2, 3, and look at that, right? And you're asking maybe, well, why did I measure that? This is the only time price had a retrace. And if you remember, we went long here. Now, when I went long there, and I'll show you why on that specific day, I had a different reason why I went long there. It wasn't because of this intra set that I just did. All I did is I went over to SPY and I said, okay, this is where I had everybody do their homework. Where do we need to break out to continue? You need the 8 a.m. low from this session, for the FOMC session, and then you need a back test of 41020. So 41020 hit, 41020 hit, and then we caught that immediate reversal, and that was it. And it was a 300% trade. But I hope what I just showed you just showed that you can do it on any session and you don't really have to be confused. Just look at everything. Okay, QQQ, SPY, and Apple. That's it. That's all you really need to do. Now, does anybody have any questions so far, by the way? I know we've covered a lot. And I know this is a lot to talk about. I really hope I'm recording. Okay, thank God I'm recording. Is 1 hour on SPY a rejection for now? No, it's neutral. Overnight, yes, but for now it's neutral. When Skywick ranges are broken, do you not use them anymore? That's a great question. Yes and no. I mean, like, for example, I'm not gonna go all the way back to uh, like April price action on intras and try and see where like those exact wick highs are until you're there, right? Like, I could probably just go over to a 5 minute and look all the way over to April 2022 and kind of formulate a thesis based off those pre-markets, right? So I'm not using them, but I don't think they're necessary. I still only think really intras are necessary. However, if you want to be really accurate, I think you should apply intras with hourly as well, because there's sometimes where like, why have we been pinned to like 2 to 3 weeks here? And that's because of what we did here. So it's like, that's also a hard part of the system. But you have to, I think if you can perfect intras, which again, I don't think is too hard, but if you can perfect them, then I think you should then move on to hourly and then go from there. So are you recording? I am recording. 6 months ago, you were doing like a hat trick, and now you're out here. System has proved a lot. I appreciate that. I've studied a lot, and I'm still learning. I mean, I've talked to market makers already, and like I've had discussions of them saying I'm right, but I'm also not right. Like, and I don't want to necessarily say like the fibbing part is the only way to do it because that's obviously not the case, right? When I look at Airbnb today, like all I had to do was just measure this print down 3 times and I got the exact floor. So like, there isn't an only way to like do it. Um, right now, the answer that I think is on everyone's mind and on my mind is what is the right way to do it. And this is the way I'm going to teach you guys for now because this is what is the most logical. I can give you guys a mathematical answer to like 1 to 2, 2 to 3, 3 to 4. But if not, then they're just price behavior changes, which is also fine. It's just not a mathematical way to say it. 8 a.m. candle, how do you see it? ARCA, NYSE, or NASDAQ data plan. I have said this before. It's a $3 subscription on TradingView, and or you purchase level 3 data. What kind of interesting is that most people say fibs develop naturally. I can't speak. Oh my god. Um, yeah, I mean, that's just golden number theory. I mean, and again, the thing with them is that they're not the diehard truth. There's still things I need for them to confirm, right? Like for example, if I did Apple today, let's just do roughly on Apple because I haven't looked at Apple today. So Apple, break of the lows, right? Neutral breakout. So we're gonna do a pivot down. So what do we find? A 1414 pivot up, 1618. So it's pinned. We're looking for a flush back down. And notice how it breaches this full cycle, right? So let's see if I can find that remeasurement. Yeah, I mean, that makes sense. And the reason why I'm saying that is 1414, you add that up, right? So let's just do 1.5 times 2 basically. That's 3, right? So that's where it bounces there. You want to think of it kind of as like baby math, not necessarily like, oh my God, how do I figure out the mathematical exact spot? Just do it like basic multiplication. So like if you have something like a 127 and you times that by 2, you know, then you have like roughly a 2618. Roughly. Roughly. So Arca is just SPY, NASDAQ also you can get everything. Yes, again, you don't need all three of them. If you just want all three, you can have all three. Um, I feel unsatisfied without 407. What can I do? Pray to the bull gods. We go in a bull market and don't lose 407. That's what you can do. It's what everybody wants. Now, the ones on Webull, I have seen people use. I necessarily don't want to recommend using the ones on Webull, and the reasons why are you will have different data sets. Webull gives you different volume than TradingView. Webull gives you different prices than TradingView. Webull shows you different dark pool prints than TradingView. Um, Not necessarily saying it's right, not necessarily saying it's wrong, right? Dark pool prints are dark pool prints no matter what brokerage you're looking at or what charting platform you're looking at. But I have not studied their momentums or whatever, so I can't give you that solidified answer as I can on TradingView. Um, yeah, I mean that's basically it. That's really all I wanted to cover. Now I think what I'll do next time is go over that Fibonacci retracement stuff. So like how do you get to this target to that one, and then measuring instead of intras to daily and then or hourly, daily stuff like that. Um, but before I continue, or before I or rather, is there any questions? Is there anything I could do for you? Is there anything you need to improve on? Is there any theories you want to discuss? Because I want this to be an open seminar. Yes, that is the proper link, if I'm not mistaken. I can't click it right now because it'll mess with my recording software, but does anybody have any questions?